The beautiful part about cryptocurrency is that there's so many ways to make money. The strategy I'm going to show you guys today is going to earn me about $2,200 or exactly $2,190. And none of this is perfect, but I'll show you exactly how it's done, how I'm able to generate yield over a long period of time. And this is again per month. This is one of the greatest opportunities still, even if there's a bear market. I want to provide you guys with some bear market strategies to outcompete probably all of traditional finance or any other investment you could possibly participate in. So if you look at some of the strategies I've been doing during the bull run, I know a lot of you have been watching my channel. If you haven't, you should definitely refer to my strategy videos where I break down exactly how you could use proper risk management with a good investment thesis to churn profits over and over again, similar to like penny stocks and the Wolf of Wall Street movie and how they invest there. We use that with cryptocurrency. So I know you guys seen this picture before, but basically, let's say you have 6 coins, you invest in all six with small amounts, and you can only lose 100% of your money. What that basically means is if you have $100, you can only lose $100. But the upside potential of altcoins is that of 20x, right? So you can make much more. And when you invest in a lot of these low market cap potentials or medium market cap potentials during the bull run, it's relatively easy. I don't want to say easy because there's no such thing as a get rich quick scheme, guys. Like there's no such thing. And anyone says that, I run for the hills, but it's relatively easy, meaning, you can't really get this type of return on any other market. And like I talk to stock investors all the time. The greatest ones are getting like maybe 50 to 80% per year. Just this in 2021, I did at least like a 1,000% return on $1 million portfolio, which is really good, right? And during the bear market, you can definitely get better returns. And the beauty of sticking around the bear market, if we are in one, I don't want to claim fully that we are. I told you guys I was going to reevaluate if we were in a bear market or not. Well, when Bitcoin hits 30K, and of course I'll update you guys on my thought process there. But if you just stay in the bear market for a long period of time, when the next bull run comes, you'll make way more money. Okay, if you pivot yourself the right way, and this is where you get the 100x's that everybody on YouTube puts in their title. Some people take advantage of the titles, right? But if you go watch my videos, I was only talking about 100x's, in 2019, 2020, before these things happened, which allowed me to get these calls like Ethereum and Polygon. I got into it very, very early. So the point I'm trying to make is, again, brings it back to what I always say. Education is the most important thing. If you can make money in the bear run and stick it out in crypto, it's going to pivot yourself for the next cycle and you're going to be very profitable. So coming back to my original strategy, we do have to reevaluate because this is a different type of market, right? If we look at the BLX and don't mind all the, tags there, that was for another video. You guys should reference that if you want to. But, when the market's going parabolic like this, it's relatively easy. You can't do that. Don't do this, but you could, put a blind over your face and probably pick like 5 altcoins in the top 100 and you'll do substantially well most of the time because all of the altcoins benefit in their own ways. They all have their own narratives. They have their own reasons for pumping. So you could do relatively well if you have this investor DCA mindset where you just keep dollar cost averaging and you manage your risk very well. You don't even need to research the projects in some cases. I hate saying these things because I don't do that. I research the heck out of them. I have a fundamental analysis checklist that we provide with fundamental secrets. The link will be in the pinned comment below where we do coaching. But this checklist basically goes over every variable of fundamental analysis. I've told you guys that before, where you can isolate the winning projects. That's what you want to do. That's the best way to treat trading like a professional and not someone just kind of doing this for fun. If you want to do this for fun, I mean, there's crypto gambling games, but professionals use good risk management, good fundamental analysis, good technical analysis to make these decisions. And again, if you pivot yourself in the bull run, you'll ultimately do very well on these big upswings. Okay, you can pick a basket of goods and most of them will appreciate by large percentages. Of course, you'll get involved in some rug pulls and some potential scams and maybe some altcoins that don't do so well. But if you look at good risk management, the ones that do exponentially well do very, very well. And they'll pop up 10,000%, some cases 100x's, some cases I've gotten a 300x on some altcoins. It is definitely possible, and all of these big exponential gains you'll pay off for all the losses that you accrue from getting involved with a scam or maybe a bad project or something like that. This strategy that I've been using and that you guys have learned on my channel, is not valid in the bear run. You cannot do this in the bear run. It's almost like the opposite effect. What you want to do is you want to consolidate to a couple of winning coins or sell to USD like I did. And then, kind of wait for either the market to pop back up. You could short the market, or you could do things like yield, which is I'm going to show you in this video how I make $2,190 per month by doing exactly this with very cheap transaction fees. And it actually took me less than 10 minutes to get set up. So I'll walk you through that, of course, but let me really briefly go over what's happening right now in Bitcoin's price. So as you can see, we're kind of making this very smaller time. It's the daily. It's not super small time frame, but typically as an investor, you want to look at weekly and monthly time frames. But for right now, in my specific position, with my company and everything that's happening, I have postured in a way to try to save from the downside, hence my decision to sell. And then I want to jump back in because I really do think that at 30K BTC, we're going to get in a significant bounce. But right now, it's still looking, it's going to take a week or two. It's not going to be right now, but it's still looking pretty bearish. We have a rising wedge, which is a classic pattern, very simple technical analysis, nothing crazy. And if it does play out the way it should, we have about a 15% decrease, which would bring us down to that 30K level. And then from there, we reevaluate if it's a bear one or bull one. But one thing I did want to point out is, as you can see from, this market going down, Ethereum looks like it's been benefiting pretty well. So if you are holding cryptocurrencies, brings me back to my bear market strategy that I'm trying to explain to you guys. You don't want to hold coins with like a $10 million market cap. You want to buy coins that are like in the top 10, top 20, consolidate your portfolio to winning and make less decisions. So in the bull run, you want to make more decisions, right? And diversify your portfolio to try to capitalize on the gains. But in the bear run, you want to make less decisions, more defined decisions, likely to be correct decisions. And Ethereum is looking like it's benefiting more than Bitcoin, and we're making this bounce up to the top top channel. So if you are hodling, that's fine. There's nothing wrong with hodling. And I do think you can make a significant amount hodling, and I've done it before. So kudos to you if you can make it through the volatility. But if you are hodling, definitely consolidate your portfolio at least to the top 5 altcoins by market cap size. And this would definitely include Ethereum because, as you can see, it's doing better than Bitcoin. And we likely have a 40% bounce to the upside. And the goal here is to make more money than Bitcoin. So very, very important. Pay attention to that. But remember also as well, altcoins can fall by significant percentages. And this is why I'm trying to tell you, keep it safe, okay? Keep it safe right now. Don't go crazy. Don't buy crazy assets, 1,000x gains that some YouTuber talked about. Please don't do that. If you come over here, stocks have, again, I just want to keep pointing it out because this signals kind of what's happening in the market. Tesla's down 27%. Apple is very volatile right now in recent history, and it's still down significant from its all-time high, about 6%. These are big evaluations down, just to be clear with you guys. And I did want to bring up, Facebook has been like the biggest one that's been showing signs of like insecurity in the market. We could just look at any stock. It doesn't matter. But you guys know, if you've been reading or looking at anything, that they sold their stablecoin DM. And you look, 37% down. They lost billions of dollars on this cryptocurrency venture. They still are trying to jump into the metaverse, and that's great. But again, this is just showing insecurity in general and risk on assets like stocks and cryptocurrencies. So just be very careful with the market. I want to update you guys on that. Also, big piece of news that just recently came out. Before we jump into I'll teach you guys how to do the yield and generating profit per month and per day. It's about $73 per day, which is significant. It's some people's salary. But I do want to talk about this piece of news. India's proposed 30% tax on digital asset income. It's like this guy's saying it's overall positive because we're seeing regulation in the market. And we're seeing regulation clarity. It's one of the biggest reasons why projects don't flourish in crypto is because they just don't know what the rules are. I'm dealing with this right now. Like my tax guys are making it up as they go. Not in a negative way, but we're trying to be compliant, but there's no clear guidelines on what to do. So you kind of have to just use best practice. And this is for every part of the business model. So seeing this is obviously a positive thing, but it's ridiculous because 30% tax, that's huge. That's huge. It's going to discourage people from trading. And I would say ultimately on the short term, this is a negative piece of news. In the long term, I'm sure other countries will have different regulation and it would be bullish in general, but this is negative. I don't care what anybody says. 30% tax is ridiculous. That's ridiculous, and they're clearly trying to make their dollar. In other news, we did talk about Wormhole, with the Solana blockchain and its huge exploit of 325 million. The crazy part about it is they probably had some type of treasury or something, and they replenished 320. They gave the money back, which gives me confidence in not only Solana, but also DeFi as a whole. They've been able to manage money in a way to where if they do get hacked, they can pay back their users, and it's all decentralized through a DAO or decentralized autonomous organization. And I think it's just really interesting that they're kind of arbitraging this money to benefit the users of the platform, right? And I've actually experienced this in multiple occasions. I was one of the guys that got into DeFi really early. I experienced a lot of DeFi hacks with my money involved. And Yearn Finance refunded me my money at one point. So this is really cool. Being that, again, it's a DAO, and there's no centralized entity that controls it. Gives me more confidence in DeFi, which will bring us to our DeFi strategy towards the end, which I'm going to teach you exactly how to get that yield. Also, this is kind of signaling, I wouldn't say a bear run, but it's signaling that they want to take advantage of the specific events in the cryptocurrency market, right? So watching business moves is really important for investment decisions, because it kind of tells you what they think the market's going to do. So 1inch is rolling out a new liquidity pools optimized for stablecoin swaps. So what does that basically mean? They think that a lot more people are probably going to be using stablecoins, and they want to capitalize on that with fees, right? So they come out with this innovative product now specifically, right? So I want you to think about that. They're trying to time something, okay? They're coming out with it now specifically. And it kind of brings me to my next point, which, making that $73 a day is going to require stable coins. We see the TVL on Phantom, or the total value locked on Phantom, increasing exponentially as the market dips, which is also showing that people are having more interest in DeFi, things that earn a stable yield, and that will probably do not extremely well. These typically do better in bull runs, like APY or liquidity pools will do better in bull runs, stablecoin liquidity pools. But it doesn't mean the volume is not increasing. It doesn't mean people aren't trading in a bear run, right? So it looks like they're trying to capitalize on that, by coming out with this new liquidity pool. And I thought that was very interesting. Also, another thing I thought that was very interesting is that Miami is receiving payouts for his own coin. I got to look into it a little bit more, but receiving dividends for being involved with cryptocurrency in Miami. Like, I'm glad I live in South Florida, to be honest, because, you could clearly see like this was not a thing in 2017, not even slightly close. But you could clearly see a huge push in general for cryptocurrency adoption. This is definitely a really cool case study on a city level, right? A city level. So we have obviously different types of case studies. We have the country level, we have the public company level, we have the payment processing level, all these different adoption vehicles. We saw that the Facebook one of DM, which was one of the first companies to adopt it years ago, they failed. But all the case studies are going to have their own path. And I think it's very interesting that you could receive payouts from Miami coin. That's really, really, really crazy. Hopefully we can get the mayor on the YouTube channel one of these days. I'm trying to track him down. So if you guys can do me a favor and reach out to him, let him know I want to interview him about his cryptocurrency and maybe look into what he's doing over there from Miami for the cryptocurrency community, that would be great. All right, cool. One more thing I wanted to touch on is I've told you guys that in previous videos, we'll probably see a bigger demand in crypto when we have an internal or external conflict. And what that basically means is, I'm speaking in reference to the United States dollar, right? So right now, USD is the world reserve currency. Everything is valued in USD. So they have this strategic stronghold over basically the world because, they're the first, they can kind of dilute the USD by printing it. And they have this power over the whole world, right? And we've seen other countries in the past, like we've seen, China and other places have world reserve currencies at a moment in time. Not specifically China. China's supposed to be the new one that's coming into power, but we've seen other countries in the past have this world reserve spot, and everyone that has it has a strategic advantage of controlling the world to a certain extent. Now, when there's a threat of losing this world reserve power, what do you think is going to happen, right? There's going to be conflict. They're going to try to, by force, keep it intact. And you see, again, U.S. Deploys troops to Europe, rising tensions. We've seen wars get started over this world reserve, strategic stronghold being lost. We've seen it before, in the history of, money in general. And I'm referencing a book by Ray Dalio. it's called principles with dealing with a new world order. We've seen in the past that they'll go to war over this. That's how strong, this advantage is, right? This is why U.S. is like always one of the biggest, like, however you want to categorize the United States, it was clearly a big power in the world. And they don't want to lose their reserve status, which is showing again, you know, it's definitely showing some type of insecurity and in the financial system, right? In the world economic system. So it could be external conflict, like a war happening, or it could be internal conflict, like a revolution happening. In both cases, at the end of the wars, there's a restructuring of the financial system that usually turn into golden ages or prosperity. So it is a negative short-term thing, but just like a forest has to be burned down to become a bigger forest, this is just a common cycle throughout mankind that we see every 50 to 70 years. And it just happens to be that you're on literally the cusp of one right now, and you see the external conflict rising with Putin. I'm not going to go into politics because it's not my area of expertise, but I do see it happening, and I do know people with credibility that are talking about it. All right, so let's jump into the last part of the video, which I promised in the beginning, which is a strategy, very simply put. And if you don't understand these things and the risk, I'm going to try to break it down for you as simple as possible. There are risks involved, but the way I picked this strategy is relatively safe in the grand scheme of all the risks that you can take in crypto. It's definitely on the safer side. So the first thing is, you guys know I'm very, very big on Phantom. So if I go to DeFi Llama, I want to show you how to do it in multiple ways so you can figure out your own strategy and you can move on a dime. Because, obviously I could show you in a YouTube video, but I might not update for whatever reason. You get the gist. You want to do it for yourself. You want to become self-reliant. So if we click the Phantom ecosystem right there, you can see that there's all of these types of decentralized financial applications. You could use any of them, but I specifically went with Yearn Finance. And if you come over to Yearn Finance, they have this feature called a vault, right? Yearn vaults are a way to use technology to help manage your holdings. You choose the strategy that best suits you, deposit into the vault, and Yearn Tech helps maximize yield through shifting capital, auto compounding, and rebalancing. So in general, they just have these strategies that they use in the back end. They basically take your money and they generate yield. And I kind of gave away, the strategy right here. So I'm using the vaults, but I'm specifically using them on the Phantom ecosystem. And the reason why I'm doing that is because if you try to use any type of DeFi yield strategy on Ethereum mainnet, it's going to cost like $150 to get into the pool, and it's going to cost like $150 to get out of the pool, which is extremely expensive. And I used to teach strategies on this back in the day, during altcoin season in 2020, when DeFi was the catalyst to the altcoin season. I used to teach this, but the problem was that nobody had enough money to jump in. And if they made a mistake, they just spent $150 on a transaction fee, which would eat away all their savings. So the beauty of this is that we're doing it on the Phantom mainnet, and you have 25 cents, per transaction roughly. And you could do this with $200. Although it's not going to change your life, what they're offering here is on average 20%. So you can see my strategy splits it up into DAI, USDC, and MIM. MIM is going through something right now within their decentralized autonomous organization, so it has a little bit more risk, and that's why you see the 20% APY. But I think the good middle ground would be DAI, which has been proven for a long period of time. And like I said in the beginning of the video, Yearn Finance refunded my money the last time they got hacked, and they've become so much better since last DeFi summer. So you could do Dollar as well, but Dollar right now, it's hard to exchange it. So like if you put in like $100, you'll probably get 80 back on a DEX. There's not that much liquidity. Or there is liquidity on the Ethereum mainnet, but on Phantom, there's not that much liquidity. So I didn't decide to go into Dollar, but right here, as you can see, DAI is getting 15% APY. So if we pull up this calculator, right, you see I have about 178,224. So if we do 178, right, and we multiply that by 0.15%, you can see that I'm getting a roughly $26,000 a year. Divide that by 12 months. You see $2,227 per month. If you divide that by 30 days, right, you get like the $73 a day. Now, again, 74, whatever the case is. Again, obviously not a lot of people have $178,000 to throw into a stablecoin yielding product, but again, you can still make money. And this is better than anything else in traditional finance. If you go to the stock market and you do some type of passive investing, like index fund investing, or you accept that benefit from your company, you're not getting 15% APY. If you go to a bank, you're getting like 0.001%. So banks are literally like almost 1,000 times less profitable than this. Okay. And again, it allows you to stay in the bear run, make money while you go, and learn these DeFi projects. Also, I just want to be clear, this is a relatively safe strategy. There's riskier strategies that you could participate in that have much better yields, like 2,000% yield, 200% yield. So if you take this serious, you can make a significant amount. You could even get a pretty good salary per month, right? It's not out of the question. But the risks are pretty high. Now I want to pull up Curve, which is like a stablecoin liquidity pool provider. It has like a unique liquidity pool that allows the swaps of stablecoins to be very cheap. But basically, they have the risks here. So audits, okay? The DeFi platform you're getting involved with needs to be audited to a significant level. It cannot be a scam, and you have to show that the code is not going to rug pull you, or they're not going to just take all the funds and run. So this is one big risk. The admin keys, right? So a lot of platforms, they own the keys of the platform. They can rug pull. It's kind of the same thing. They could just take the money and go. So you have to know what you're doing, and you have to go on platforms that build a lot of credibility. And that's why I love You're in Finance, right? Permanent loss of a peg. So the stable coins themselves have mechanisms to keep stable. So for example, if you have a USDC, which equals $1, they have a mechanism to keep it that $1. Okay. And there's always a risk. And we've seen this before. Not if you get involved with the super risky APY, if the APY is like above 30-40%, then just understand that these things could potentially happen. And you have to research the project and weigh out the pros and cons for yourself. And you could take it out quick too. That's the beauty of Phantom Mainnet, is that you can withdraw the funds for less than 25 cents right now very easily. Okay. You couldn't do this in Ethereum, and you would have to leave the money in there and kind of see the investment out and like see it to its its final product or whatever the case is. But on Phantom, you could pull it out. If you make a mistake, messed up transaction, that's fine. It's 25 cents. You pull it out. And remember, you could use also small amounts of money. You could do like $200. You could do like $300, whatever the case is. But there are risks, right? You could lose the peg. You can get rug pulled by the admins, having the admin keys, and the audit could be incorrect. Someone can economically attack the platform. So there's different issues, and you should definitely do your own research. But the way I went was, in my personal opinion, very safe to get this 15% APY. So if you just simply go to Phantom, go to Urine Vaults, and you could just simply deposit the liquidity in there, get a stable yield. And if we do bottom out over here at Bitcoin, which might take weeks, right? And we do bottom out over here at 30K, then you could use that money to buy right back in. Okay. You could buy back in right here. Also, just to go crazy, you could do something like Abracadabra, right? You can get real crazy and get this yield, wait for the 30K drop. So Bitcoin comes back down to 30K. If it does, there's a good chance it doesn't have to, right? It doesn't have to. Like, you guys know, I'm pretty open with my strategy. I'm like a profit maxi. So right now, I do think we're probably going to come back down. But if we don't and we break above, then I'll just jump back into another position here. It's okay. I've told you guys this before in the past. There's nothing, emotional or bias. But I do think it's going to probably reject off of the 39K again, just like it has multiple times. And then when it does come down, I enter a position on Abracadabra. So if you don't know what this is, it's also on the Phantom Mainnet, and this is the beauty of DeFi. And then from here, you can actually borrow against your own money. So let's say, oh, Alex, I want a diamond hands. That's fine. So you could take, for example, your Phantom, drop it in here if you want to invest in Phantom. There's other platforms like LUSD, liquidity.app is another one that you could use on the Ethereum mainnet. But I can, let's say I want to, buy Phantom when Bitcoin hits 30K, Bitcoin drops to 30K, I buy Phantom because I think the market's going to reverse. And then with that Phantom, I could take a loan out. So let's say I buy $100,000 with the Phantom. I could take 30K out, keep the $100,000 with the Phantom exposure. So if it goes up, I make money. And then that 30K, I drop it into another yield, right? Generating platform, and get that 20% APY or that 15% APY. So it's just like a win-win-win, especially if you know how to use your money and extend your money to these extents where you don't have to like go add more liquidity or deposit more money from your bank, right? These tools allow you for financial freedom, and you don't have to ask anyone for permission. This is permissionless technology. This is decentralized finance. You guys know I'm bullish on cryptocurrency, and this is why I always talk about it. And I did want to make you aware of my recent decision to drop some liquidity into these 3 stable coins that are generating approximately 15% APY per year, which to me is significant. And if you want 1,000x gains tomorrow, well, you're greedy and you don't deserve it. Okay, money's like girls, right? If you act desperate, desperate and you just like annoy the girl, she's not going to want you. But if you look at money like, hey, you detach yourself. You detach yourself from the money. Like, hey, if it goes down, it's not that big of a deal. Same thing with the diamond hands, right? Like, this is why people make money, hodling, right? Because they detach themselves from money. It's the same thing, okay? Detach yourself. Don't be desperate. Don't make these crazy 1,000x gain moves, right? And, I know they do it for the clickbait title to get your attention, but if you don't act desperate, you understand how money flows, understand the risks involved, you will make money and you eventually will get rich. And the only reason you are not rich right now is because you just have not spent enough time in the cryptocurrency market. And I'm very confident about that. I'm watching multiple people go through their first cycle. They could be the smartest people in the world. And I'm literally watching them go through the first cycle, and they're going through all the same mental pathways that I went through in my first cycle. So again, look at my second cycle. My second cycle, I got extremely rich. I was able to hire all my best friends, and we have 25 employees at the office. And now I'm making a business that could be evaluated at $20 million. So just understand that if you stay in the market for the second cycle, regardless if this is a bear run or not, the bull run could continue. I've already told you guys that in multiple videos. The people that look at my titles and cry about it in the comment section, that's up to them. But if the bear market does happen, it's okay. We can make money. We'll make significant amount. You just have to adjust your spending a little bit, and you can't ball out on your cryptocurrency, NFT, JPEG, right click, scam JPEGs or whatever. You can't just ball out all day, right? Like this thing has to come to an end eventually. The hype will stop eventually. That's just the name of the game. But yeah, that's pretty much it for this video. If you like the quality of this content, hit like. If you don't, leave some constructive criticism, subscribe for more video updates. And like I always say, if you don't get with it, you will get left behind. Thanks for watching this video, guys. I love you. Catch you in the next video.